Dan Hughes, it's been a great run for stocks since the financial crisis, but it's been awfully choppy in 2015 so far. So is the rally over? Is the bull market done?
Yeah, great question. I think what we're seeing is a little bit of consolidation over the last couple of years, right? The market, exactly like you've said, has been on an incredible run. The markets over the last 5+ years have compounded at a high teen level, but I don't think that's sustainable going forward, right? What we're looking at here is if we're at the end of this beta wave, the kind of the crest, what really is going to be important is high active share, high conviction type of managers, and those are the types of folks that you can look at to try to find returns on the next level here.
I thought that low oil prices might help extend the rally, but people are unsure about where oil fits into the market now. Some people say that lower oil is going to help the consumer. Other people say we're going to lose a whole lot of energy jobs. What's your view?
Yeah, sure. So, I think it's an interesting point, right? It's something that is going to certainly help the consumer, right? Puts more dollars in your pocket, but it creates volatility and uncertainty in the marketplace. If this is, I think it's an overarching theme of what we're seeing this year, right? There's volatility, there's uncertainty. It's been such a great ride, but now all of a sudden it's, you can no longer go out and identify broad-based sectors to invest in. You can no longer just be an investor inside the marketplace, right? It's about being very, very specific, and I think we've seen that more so than over the last couple of weeks than at any time through the last market cycle.
And right now, Vaughan Nelson is a big fan of mid-cap stocks. Why is that?
Yeah, it's funny. Our shop, we have 3 portfolios. Vaughan Nelson runs a small cap value, a mid cap value, and a concentrated multi cap value. The majority of our assets actually sit in the small space in our small cap strategy, but we've been encouraging investors to move up into the mid cap space. And it's a function of a couple of things. One is a function of the replenishment cycle in the small cap. It's been deteriorating. 2 reasons. One, it's very cost ineffective for a lot of small companies to go public today. Secondly, a lot of private equity firms have been going in and acquiring those attractive smaller companies. So the pond that you're fishing in is just continuously shrinking. Plus the movement and the success of companies over the last couple of years, given the expansion, they've grown up, right? They're no longer small. They're now at a size where they're mid. So we really like the mid and larger space relative to where we've seen in the small.
And is there some area of the market that you're avoiding right now?
Again, there's nothing that we're particularly moving away from. Aside from our portfolios are void of REITs and utilities at this point. It's a little bit more of a cyclical interest rate bet more than anything else. But beyond that, again, if you're going out and trying to find pure sectors, nothing that we really are discouraging beyond those. But again, it's much more security specific when we're trying to identify names.
All right. Thanks a lot, Dan.
Yeah, thank you for having me. Thanks.
And thank you for watching The Street.